It's your running partner, Dr. Minor Justice. Today we get to learn more about taxation. And in the learning about taxation, we get to start with the introduction to taxation. In this lesson, we are going to discuss the definition of tax and also taxation and the various definitions. We are also going to discuss the historical development of taxation, the government activities, the sources of public revenue, the reason of why we have taxation, and also budgeting and taxation. To start with, we start with the definition of taxation. Taxation usually refers to the process through which the government raises revenue by collecting taxes. Whereas tax is a compulsory payment by either individuals or organizations to the government without any direct benefit to the person who is paying. Tax can also be defined as the payment made by individuals or group to the government to meet the expenses which are incurred for a common cause. What is the history of taxation? We have the early ages of the history of taxation, and we see that taxation has an extremely long established history. The basic principles of taxation are nearly as old as the human society. Several ancient civilizations, including the Greeks and the Romans, levied taxes on their citizens to pay for military expenses and other public services. This we can refer back to the Bible, whereby we talk about the books of Romans, chapter 13, verse 7, and it tells us about the payment of taxes. And the earliest known tax records usually dates back from approximately the 6,000 years before Christ and are usually in the form of clay tablets. And they are found in the ancient city-state of Ragash. Ragash is what currently we call Iraq. This early form of taxation was kept to a minimum, except during the period of conflict and some hardship. The Greeks, Egyptians, and the Romans also enforced tax policies that they used to fund centralized government. The Greeks levied several types of taxes that are still enforced in many developed countries. That is, including taxes on properties and goods. Unlike what we had in Greek, the Roman policies began to weigh heavily on its citizens as the power and corruption of the empire's central government grew. The excessive tax burden on the productive Roman citizen during the 4th and the 15th centuries was a leading cause of the nation's eventual economic collapse. We can see also in the ancient Chinese societies, they also levied taxes to their citizens. The Chinese instituted a form of property tax around the 600 before Christ, and this required that 10% of the cultivated land to be dedicated to the central government. That is in the early ages. But now, in the Middle Ages, the fair taxation was a key issue for most of the English citizens during the medieval period, and most of the citizens were subjected to tax, whereby they were obligated to donate 10% of their labor or produce to churches. This grew, and we have seen taxes changing over and over, even during the period of King John. After the domination of taxation in the European politics, we have seen also emergence of tax in the Middle East, where the Muslim conquerors took over the large portions of the northern Africa and the Mediterranean region during the 14th and the 15th centuries. Here, they ruled over a diverse population, including the nomad Jews and Christians. This was subjected to special form of taxation that did not apply to the Muslim citizens. And those societies that did not convert to the beliefs and tradition of Islam had to pay a special tax. That is during the Middle Ages. But now, during the colonial period, we have seen the emergence of tax all through in the colonial era. So taxation policies developed quickly during the colonial period as wealth began to flow into Europe from the colonies in Africa, Asia, and Americans. The Great Britain enforced the first general income tax in the 1799. This is to help finance war against France. The dispute between the American colonists and the English crown that eventually led to the American Revolution was partially attributed to the dispute concerning fair taxation, and here they were asking for representation in their part of taxation. And they came out with a slogan, no taxation without representation. And while the colonists were forced to pay taxes to England, including hefty duties, on examples of issues like tea and stamps, they did not have direct representation in the parliament or in the monarch court. That is during the colonial period. What about the recent tax history? And usually, the first federal income tax in the US was created shortly after the Civil War to pay for the debts accrued during the costly internal conflict. The tax was not universal. It only applied to citizens above a certain income level. And you see, that is mostly what we have as pay as you earn. Many European nations also adopted income taxes during the 19th century. For example, France began to levy an income tax during the World War I in response to the threat of German invasion. So that is a simple summary of what is the history of taxation. Then, after taxing, we can see that this taxation, the money is given to the government, but it is individuals or business entities that remit to the government. What are the activities of the government? So we discuss the government activities in regard to the money that they have raised through taxation. One of the activities is to maintain internal security and external defense and carry out general administration. Number two is to provide infrastructure and communication. Number three is to provide basic social services. Four is to participate in the production and marketing of commercial goods and services, influencing and guiding the level and direction of the economic activities, redistributing income and wealth through taxation and public spending. So those are the government activities. But we can also see the sources of public revenue because there might be many. Despite having just tax, we have other sources. What is public revenue? This refers to the revenues and resources received by the government from different sources. And this is the income that the government gets from its citizens. The main sources of public revenues are usually, for example, we have tax, and we have seen that tax is usually a compulsory payment that is levied by the government on individuals and firms without any direct benefit to the payer. Then we have what we call the fines and penalties. And simply, these are the charges imposed on individuals, firms, or business entities who break the rules of a country. So, this is usually paid by the offenders of the law. Then we have the fees, and these are payment charged by the government for the direct services it renders to its people. A good example is the road license fee, and we can see it in the expressway in Kenya. We also have the marriage certificate fee and also the import license fee. Then another source is the rent and rates, and this is usually charged on use of the government properties. For example, we have the game parks. Then we have what we call the eshets, and this is income obtained from properties of persons who die without legal heir or a proper will. Their properties are usually taken over by the state. So that is where you need to have a good will. Then we have dividends and profits. These are the income received from the government direct investment. Then we talk about interest from loans, and this is the interest on loans advanced by the government to farms and individuals through its agencies. For example, we have Agricultural Finance Corporation. Then we have the proceeds from sale of government property. Remember, a government has its own property. Like you can remember, we had the great, the Grand Regency Hotel, which was being sold, and that was government property. Then, what are the purposes or reason for taxation? They are self-explanatory, such that the first purpose or the reason for taxation is raising revenue for government expenditure. The reason is to discourage or control consumption of certain commodities. And you can see a good example there is alcohol and cigarette, which are considered to be harmful. That is for the purposes of social welfare. The other thing is to discourage importation of certain commodities in order to protect the local industries. Then we have controlling inflation, reducing inequality in income distribution, influencing location of a business, correcting unfavorable balance of payment, and also to protect the key sectors of the economy, such as the agricultural sector, by stimulating their growth. So, those are the reasons for taxation. So, what are the factors that determine the amount of money raised through taxation? We have the distribution of income, social and political factors, honesty and efficiency of those in the tax authorities, the citizens' level of real income, economic structure of the country, that is the relative size of the of the country's commercial and subsistence sectors. So that is what we are saying as the factors that might determine the amount that is going to be raised through taxation. So because we are raising taxes, we need to spend this money, and it is usually spent through the public expenditure. And public expenditure refers to the resources spent by the government. And here they include the recurrent expenditure, development expenditure, or what we call the capital expenditure. Then we have the transfer payment. What is a recurrent expenditure? This usually refers to government spending that takes place regularly. For example, payment of salaries to civil servants, fueling of government vehicles, and so on and so forth. Every financial year, the government must allocate funds to meet such expenditure. So we can also say that recurrent expenditure can also be called consumption expenditure. Then we have development expenditure. This is also referred to the capital expenditure. It is government spending on projects that facilitate economic development. Such projects include construction of railway lines, roads, we have the airport, rural electrification, and so on. Once these projects have been completed, they may require some maintenance, like what we are seeing in various roads. Then, what is transfer payment? This is expenditure on things or people who do not directly contribute to country's national income. For example, we have expenditure on money spent on famine relief, pension, or even bursaries. I stated in the beginning that we need to also study budgeting and combine it with taxation. That is the reason why we usually have budget reading each and every year to try and budget for the amount to be spent and amount to be raised. So this is usually done through a finance bill that is usually raised in the parliament. So what is a budget? It's usually a statement which contains the estimated government revenue and expenditure for one particular year. And mostly in Kenya, it starts from 1st July to 30th June. That is the whole financial year for the government. So mostly if the government expenditure is usually more than the revenue, then this we usually call it a deficit budget. But if the revenues are more than what is being spent or the expenditure, we call it budget surplus. But if we have government expenditure equals to what is being spent or the revenues, government expenditure rather, equals to government revenues, that one we call it a balanced budget. What are the objectives of budgeting? Budgets are usually designed by the government to achieve the economic objective of, for example, price stability, capital accumulation, economic growth, equitable distribution of income, raising of government revenue for provision of services. It is a major means by which government regulates the economy. And we are saying that the government uses both physical and monetary instruments to achieve budgetary objectives. So we need to have budget and taxation working together. So finally, I have a question here. What is the role of tax in achieving the budgetary objectives? Thank you for listening. It's always your running partner, Dr. Maina Justice. My contact is 0708 915 965 for consultancy services in terms of finance, accounting, tax, and management. Thank you very much.